Hello everyone, welcome back to our e-banking course. Sudan International University, Faculty of Economics, Financial and Banking Studies, Department of Banking, Semester 7. I'm Dr. Maida Mustafa Sadiq, Associate Professor of Economics. Today's lecture is Lecture 5, Regulatory Framework, Governance and Compliance in E-Banking. As banking services continue to move into the digital world, ensuring that these services operate safely, legally, and ethically has become more important than ever. In this lecture, we will explore the legal and regulatory environment that supports electronic banking, understand governance principles, discuss compliance requirements, and examine international regulatory standards that banks follow worldwide. Let us begin. Regulatory framework in e-banking. Electronic banking provides customers with convenience by allowing them to conduct financial transactions anywhere, anytime, and anywhere. However, this convenience also introduces significant risk. For example, customers may become victims of cyber attacks, identity theft, fraud, or unauthorized access to their accounts. To address these risks, governments and financial authorities establish what is known as a regulatory framework. A regulatory framework consists of laws, regulations, policies, and supervisory guidelines that govern electronic banking activities. Its main objectives are to protect customers, ensure financial stability, prevent fraud, promote confidence in digital banking. Example, suppose a customer transfers money using a mobile banking application. The transaction must comply with banking regulations regarding customer authentication, data protection, transaction monitoring, and record keeping. Without regulations, customers would have little legal protection if something went wrong. Governance in e-banking. Now let us discuss governance. Governance refers to the system through which an organization is directed and controlled. In electronic banking, governance ensures that technology supports the bank's strategic objective while maintaining security and accountability. Good governance requires clear organizational structures, defined responsibilities, internal controls, risk management, ethical decision-making, continuous monitoring. Governance is not just the responsibility of the IT department. Senior management and the board of directors are ultimately responsible for ensuring that digital banking operates safely. Example, if a bank introduces a new mobile banking application, governance ensures that security risks are assessed, customer data are protected, employees receive appropriate training, compliance requirements are satisfied before launch. Electronic transactions laws. Electronic transactions laws make online business legally valid. Before these laws existed, many countries only recognized paper documents with handwritten signatures. Today, electronic transactions laws recognize electronic contracts, electronic documents, digital signatures, electronic communications. This means that An online banking agreement has the same legal value as a traditional paper agreement. Without these laws, electronic signatures might not be accepted. Online contracts could become legally invalid. Customers would have weaker legal protection. Banks would face greater legal uncertainty. Example, when you open a bank account online using a digital signature, that agreement becomes legally enforceable because electronic transaction laws recognize a digital signature. Data privacy and protection. Many students confuse data privacy with data protection. Although they are closely related, they are different concepts. Data privacy focuses on customer rights. It answers questions such as what information is collected, why is it collected, who can access it, has the customer given consent. On the other hand, data protection focuses on securing that information through technical measures such as encryption, firewalls, access controls, backup systems, cyber security monitoring. Example, imagine that a bank stores customer account balances. Privacy determines who is allowed to view that information. Protection ensures hackers cannot steal it. Think of privacy as deciding who may enter the house, while protection is locking the doors and installing security cameras. Comparison between privacy and protection. Let us summarize the differences. Data privacy focuses on collection and use of information, customer consent, customer rights, privacy policies. Data protection focuses on technical security, preventing unauthorized access, cyber security controls, information security technologies. Both are equally important because protecting customer trust requires both legal rights and technical security. Key regulatory frameworks in digital banking. Several international regulations influence digital banking worldwide. Let us discuss the most important ones. First, GDPR, the General Data Protection Regulation, was introduced by the European Union, and it gives customers greater control over their personal information. Banks must obtain customer consent before processing personal data. Second, PSD2. PSD2 stands for the Second Payment Service Directive. Its objective is to promote innovation and competition through open banking. It requires strong customer authentication, secure APIs, licensed third-party access. Example, a customer may use a budgeting application that securely accesses their bank account information after obtaining permission. Third, AML regulations. Anti-money laundering regulations help prevent criminals from using banks to hide illegal money. Banks must verify customer identity, monitor transactions, report suspicious activity. Fourth, Basel II, Basel III. Basel III is strengthening financial stability by improving capital adequacy, liquidity management, risk management, stress testing. These standards help banks remain financially stable during economic crisis. Anti-money laundering, AML. Money laundering involves making illegally obtained money appear legal. Electronic banking has increased money laundering risk because transactions are fast, global, remote, available 24 hours a day, highly automated. Banks therefore use advanced technologies to monitor millions of transactions every day. Modern anti-money laundering systems rely on artificial intelligence, machine learning, big data analytics. These technologies automatically identify suspicious transaction patterns. Example, if a newly opened account suddenly receives multiple international transfers worth hundreds of thousands of dollars, the system may automatically flag the account for investigation. Anti-money laundering risk in e-banking. Some common anti-money laundering risks include identity theft, fake digital identities, anonymous transactions, cryptocurrency misuse, cross-border money transfers, account takeover, shell companies, online payment fraud. Banks must continuously improve their monitoring systems because criminals constantly develop new methods. This is why compliance is an ongoing process rather than a one-time activity. Compliance management. Compliance means following all applicable laws, regulations, and internal policies. Compliance management helps banks identify risk, monitor compliance, conduct audits, train employees, review internal controls, report regulatory violations. An effective compliance program reduces legal penalties, financial losses, reputational damage. Example, suppose the regulations require banks to verify customer identity before opening an account. If employees fail to perform this verification, the bank could face heavy fines from regulators. Compliance ensures these procedures are constantly followed. I advise the student to pause the video after each question and try answering before to reveal the explanation. You have true-false questions, 10 true-false questions you have today. You have to solve it and upload it to my page. Today, we learned why regulatory frameworks are essential in electronic banking, the importance of governance, how electronic transaction laws provide legal recognition for digital transactions, the difference between data privacy and data protection, international regulatory standards, including GDPR, PSD2, AML, and Basel III, the role of compliance management in maintaining safe and trustworthy banking services. Understanding these concepts is essential for anyone working in modern banking because technology alone is not enough. Successful digital banking also requires strong governance, legal compliance, and customer trust. Thank you for your attention. In our next lecture, we will continue exploring another important topic in electronic banking. Goodbye, and I look forward to seeing you in the next session.